What is up, everybody? Welcome back to Bitcoin and Markets. Happy Friday. It's always good when Bitcoin is pumping on a Friday. Friday is a big week in or big day in my household with 4 kids in school. So everybody enjoys their Friday. Hope you guys are doing well wherever you are. Big news of the day today is ETF. The ETFs are meeting with the SEC back and forth, lots of back and forth happening. We have some updates on that. So we're going to get into the ETF, the moves happening with marketing and all sorts of stuff. Then we're going to cover macro. So I cover Bitcoin and macro on this channel, but I haven't covered a ton of macro charts in the last week or maybe even 2 weeks. So we're going to dive into some of those macro charts and talk about that. So thank you for joining me. Let me share the screen and get right into it. If I can find the right screen. There we go. And we will go to the home page. So I did get out this morning, or I guess around noontime, that Market Proton, that's my premium newsletter that I send out. I talked about Bitcoin related stocks and Bitcoin pricing of all of those things, especially thinking about the ETF and thinking about maybe in 4 to 6 years, Bitcoiners are long-term holders, but eventually there is going to be a time where Bitcoin slows down. Bitcoin is not going to 10 or 20x in every cycle. Eventually, once it gets to very high prices, there's going to be an opportunity to rotate out of your Bitcoin holdings into other things. I wrote about this on BM Pro. Let's go to BM Pro. This is Bitcoin Magazine Pro. Wrote about that this week. Bitcoin's Cantillon effect and opportunities in Bitcoin related stocks. So, as we get to very high prices in Bitcoin, hopefully in the next couple cycles, all of that new purchasing power that's created in Bitcoin is going to be filtered through the Bitcoin related industry. So we need to keep our eye out for opportunities to maybe diversify out of holding Bitcoin into perhaps holding, shares in Bitcoin related things, because all that money is going to come in. So where Bitcoin, the upside might go from right now, there's upside of roughly 100x probably. Next cycle, that'll be down to 10 or 20. And the next cycle after that, it'll be down to, a 50% move or whatever, where these stocks or these Bitcoin related companies, they're going to then have the opportunity to 100x. So that's what I write about on BM Pro over here, and also back on my website, bitcoinandmarkets.com. I wrote about that this morning. Also put out the December price forecast competition. November, the winners were announced. Let's see, it was green and I don't know how to pronounce this. Abellini, whatever. I notified you guys on Telegram. So DM me and I'll get you your $20 in sats over the Lightning Network. But now December price forecast competition is out. All you got to do, guys, is be a paid member over on the website, and you can guess the price for the end of the month. And the person closest to the close of the monthly candle wins $20 in sats over the Lightning Network. So it's kind of a fun competition. I also put out dangers of mislabeling inflation, a response. So I read Once Upon a Species with Jesse Myers. He writes great stuff. He's a great content producer, really smart guy. I just had to pull on a few strings in one of his recent posts over there from his Substack, and that is my response. Okay, that's it for the website. Let's dive in to the news. So ETF news here, Caitlin Long. She tweeted out, if this is true, then as Eric Balkunas predicted today, there's going to be an epic marketing war by all the spot Bitcoin ETF issuers. And it's going to be fun watching normies say, wait, wasn't Bitcoin dead? All ahead of April's halving and US presidential election. So just kind of summarizing the bull narrative right now in Bitcoin. Everything is positive for Bitcoin. The only thing negative out there is there are a few politicians, the globalist side of the House, that are pushing back on this. Of course, they control the administration at this time, and Gary Gensler works within that administration. So I've talked about this before, and I've talked about this on my writings just this morning. Gary Gensler's head is like that pressure point where everything is coming together, from Wall Street and Bitcoiners and tech guys all wanting these ETFs approved, and the globalists not wanting the ETF approved, the globalists that are in control of the administration. So Gary Gensler is right there, and we will see how he performs. But they're talking about an epic marketing battle, and we're going to go through that. But let's see what Andrew AP Abacus has to say. We'll click through to this. So update, SEC meeting with spot Bitcoin ETF issuers has been voluminous, the meetings with them. SEC source, 99% approval and all at once. Don't know where he's getting his information. Dotted I's and crossed T's across all applications. Grayscale doing all it can to be first, conversion based on court decision. Okay. So Grayscale, I think, met with them today. BlackRock met with them yesterday. It seems like there's a revolving door at the SEC, getting everything, like he says, dotted the I's and crossing the T's. This guy's saying 99% approval. The ETF experts at Bloomberg and at the ETF store with Nate Garachi, they are still sticking with a 90% approval. But one of the interesting things, if we go over here to James Seifert's tweet, he was on this Hard Money podcast. He says, the window for potential spot Bitcoin ETF approval is looking like it's going to be between Jan 5 and Jan 10 of 2024. I spoke with these guys this morning and nailed this call. And I think he quoted this tweet, which we'll jump into. So this is from Scott Johnson. He says, SEC is publishing to Federal Register tomorrow. The Franklin Hashdex delays. Quicker turnaround than usual indicates, again, this is about lining up potential approvals. So the way that they line these things up is, they have the deadlines. It's like 45 days, then a 60-day deadline, then another 60-day deadline. And I think the last one is only like 30 days or something. So they're lining up all of these deadlines. They delayed a couple early. They had a couple more weeks until they would have to delay some of these ETFs, but they delayed them early in order to all sync them up. And now they're all synced up. They've all been meeting with the SEC, dotting their I's and crossing their T's, and the window opens on the 5 Jan. If you look at a calendar, 5 Jan is on that's December. 5 Jan is on a Friday, so that is possible. But I think one of the last comment periods closes on Friday. So it doesn't quite sync up on the 5th. So it probably actually opens up on the 6th of Jan, and that's a Saturday. So the window that we're looking at here is 8 through 10 Jan, just a 3-day window in January, not too many weeks away. Let's see, how many weeks away is that? 1, 2, 3, 4, 5, 6 weeks away. It's coming, guys, and the price is reacting. Last tweet here before we get into the charts is ARK 21 shares have ace up their sleeve in the Bitcoin ETF Derby, as it's likely to move $130 million out of GBTC and into ARK B. So yes, ARK owns a lot of GBTC shares, I guess 130 million. And it is potential that they will move that out of GBTC. But what does that incur? That makes the discount go down. So if you have a discount to GBTC, today it was 9% that I saw. It's closing. But if you're going to dump $130 million, it's going to widen again. And why would you sell your GBTC at a 10% discount and turn it into your ARK thing? You're instantly losing 10%. That would not be fulfilling your fiduciary duty. So they will not do this if there is a discount, period, on GBTC. If there's a discount when all of these things get approved, they won't be doing this. They'll slowly be trickling it out, maybe, but not all at once, in the first week or whatever. So watching that discount is very important. The discount also shows what is the likelihood of these things getting approved, and it continues to decrease. So that means that as we move forward in time, the likelihood of an ETF getting approved anytime soon is getting better. Okay, let's take a look at some of the charts. Like I said, it's always good on a Friday when you have a nice big bullish candle. Still in this channel, fighting off this channel, but let me bring up this. Is it this one? No. Sorry. There it is. So I've been talking about this 37,877 for a while because it was the close back on November 15th at the top of the channel. And let me just make sure I'm going out. All my levels are good. Had a sinking feeling. Let me check my guys over on Telegram. I was muted the other day when I was live streaming to YouTube and Rumble, and I was supposed to be live streaming to Telegram, and I had them muted the whole time. Sorry about that, guys. Hopefully you had a chance to go over and watch it on YouTube and Rumble. But okay, so let's get back to these charts. See, we broke out of that today, and this last Friday, I think, on the live stream, I drew this a triangle underneath this line and within the channel, and I said, we're going to be going towards the end of this, and it looks like December 1st, 2nd is going to be the big breakout of this area, and we finally got it. We tested 1, 2, 3, 4 times above that line, could not close above this close back from November 15th. People were protecting that level. Somebody was selling at any time it was over that line. Somebody was protecting it, and they ran out, or the calendar flipped, and maybe their trade, they could close, their trade was automatically closed, or they closed their trade and allowed the price to rise. So the goal here right now, or the target, is top of this channel at 40,000. I mean, that's pretty obvious level. If we break down, which I do think is less likely, we have support at 37 now, 37.8, 35.4. If we bring up the moving averages, we have the 50-day moving average screaming higher right now at 34. That's also going to be acting as support. What else? We probably have some other stuff acting as support. Let's check the 20-day. 20-day is at the bottom of the channel. That's acting as support. So the channel will also be support. What else? We have the Kijun of the cloud. That is, I think, right around 32,000, something like that. So there's all sorts of support underneath this price. It's going to take a lot to crash it down. The path of least resistance is higher. Let me also bring up the volume by price, because I wanted to show you guys this. I was actually going to put it on this morning's premium newsletter, but I forgot about it. So, oh man. All right. So what are we looking at here? Let's close these, delete these. And we can hide some of this. All right. So you can see the price is coming up, and it just passed this bulge. The bulge at 37,000 right there. We just passed that. This is volume by price. I mean, where in the price did that volume occur? And you can see most of that volume obviously was coming back from here, back in February of 2022, June of 2021, and even January of 2021. So there was a lot of volume that we finally broke through. Now, that acts as resistance, because if you bought or sold at 37,000 or 38,000 back in this time, maybe you're going to sell at break even. I don't know who that would be, but maybe some people would be like, finally, we get back to break even, I'm selling. Maybe some people that don't follow the space very much, they just dip their toe in, they bought at 38,000 and it gets back to 38,000, and now they're going to sell because they're back at break even. But what's above this? Very little resistance at all. There is a huge dip down in interest and attention in the price in the mid 40s. This next big bulge is coming up at about 48,000. So there's not going to be a lot of structural resistance as we go higher in price. That's what I'm trying to point out on this one. Okay, enough with Bitcoin. Let's look at a couple other macro things. And before I do that, I want to take a look at one more tweet, guys. And this is going to be from Jeff Schneider. I'm a big Jeff Schneider fan. I disagree with him on Bitcoin, but most of the other stuff, over 50%, I agree with Jeff Schneider. And that's pretty rare considering I'm the dissident Bitcoiner and I don't really agree with most macro people at all. But here we go. This is what he says. Nothing to see here, just massive hedging back in SOFR's futures. 20 bips moves, which are rare in key contracts, just like April through March. Oil down big despite OPEC. So OPEC came out and said they were going to cut another 1 million barrels per day starting in January. There was some back and forth, talk with Brazil because Brazil was going to be getting involved more deeply with OPEC, but they said they're not going to cut. Who knows? There's just problems going on with OPEC. And I did talk about this on a stream, I think Wednesday, saying that, as we go into global recession, and you're going to ask these oil producers to cut their only export, to cut their only source of revenue, they're going to say to the Saudis, no. Maybe this is the last one that they can do. But just because they say they're going to cut doesn't mean they're going to cut. There's no legal remedy, as far as I know, to keep the OPEC countries from producing at what they say they will produce at. So let's say Libya, or who else is in OPEC plus? Venezuela, of course, and Nigeria probably, the OPEC countries. Those are some marginal ones that could outproduce what they say they're going to produce. I don't think Saudi will do that. I don't think the UAE will do that. But Russia could. I could see Russia producing more than they say. Because think about this. You're a marginal country, you're a marginal OPEC producer. And Saudi tells you they're going to cut production. What does that tell you? That tells you price is going to go up. So what are you going to do? You're probably going to produce a little bit extra because you're going to have higher prices. So there's a lot of games being played here within OPEC as well. Just because they say they're going to cut doesn't mean they're going to cut. And going into recession, I mean, all bets are off. I bet they're going to produce more than their quotas. Some of the smaller countries will definitely. Bond yields are tumbling. Good thing this will be a soft landing. And then let's take a look at this. So these are SOFR futures. And you can see out here, this 2024 contract, June of 2024, is the price is up 15 bips. So that means the yields are down. And here the price is up 20 bips for the September contract and 21 in December. And then March of 2025 still going at 20, almost, rounding up to 21 bips. The March contract, though, what Jeff alludes to there, he says, like March and April. So like March and April this last year, when we had the banking stuff with Silicon Valley Bank and all that stuff. So the March contract is only moved 8 basis points, but still, they're all going the same way and they're all moving a lot. So there's a lot of movement in this. People are saying, this is bringing liquidity. As rates go down, that means there's more liquidity out there. Money is coming into the market. That's wrong. Okay. These people are they're getting defensive. And also, you have to ask yourself, where is this money coming from? Most likely, my opinion on this, and I don't know if Jeff would agree with me, but I think the shadow banking system, when it starts having problems with the ability to rehypothecate and the ability to repledge, and the liquidity is drying up in the shadow banking system, they come out of the shadows into the primary market and they just buy the treasuries in the primary market. So rates can go down when liquidity is going down. It's almost a telltale sign of that's exactly what's happening. All right, so let's go back to the charts and let's get rid of the volume by price. And we'll take a look first at the 10-year and go to the daily. So we have this support line that I drew. It kind of bounced off it for a day, and now it crashed down below. It is down 13 bips for the 10-year, 3% in one day. And below this, I mean, you could say that there might be some support around this area. Down here, where is that? 4.06, another 13 bips. That's possible that I could get to that next week. But as we go into recession, remember, guys, the pre-recession period, which is what we're in right now, liquidity is tightening. People are flooding into safe haven assets. Of course, treasuries, safe havens. And they are getting bid right now, big time. This is part of a pre-recession move. Another part of a pre-recession move is the S&P 500. S&P 500, people think that stocks are risk on. And yes, I understand what they mean by that, stocks are risk on. But there are a lot of different types of stocks in the S&P 500. There are fewer types of those, fewer variety in the Dow Jones. We could look at that. The Dow Jones being 30 large blue chip companies. Those are less risk on, right? Those are actually safe havens. Who's going to have access to credit in a recession? Who is going to make it through a recession? If we start, quote unquote, printing money, having bailouts and all this stuff, who is going to benefit? The big guys. So in the S&P 500, there's a handful of stocks that are seen as safe havens. That's why when you you can strip out all like 493 stocks, and you still have those magnificent 7 or whatever, and they have most of the gains over the last 15 years, because the entire environment in the last 15 years since the great financial crisis has been towards a gigantic global credit bubble bursting. Yes, there's been periods of reflation, but the entire period is trying to avoid a collapse of a global credit bubble. We're still there. So the big guys, they are seen as safe havens. The stock market as a whole is not a risk on thing. The bottom 90% is a risk on thing, but the top 10% of the stock market is not. Okay. And that's where most of the gains happen. I think the Magnificent 7 is like 30 or 40% of the market cap of the S&P 500. Most of the gains are going to happen with these big guys. So that's why I've been talking about. That's why I called this year to have a big year in the stock market, and it has. Let's measure this. So stock market is up over 20% for the year if you're talking about the S&P 500. NASDAQ is probably more than that. Let's check it out. About here. 50%. NASDAQ is up 50% on the year. I mean, any year, that's a great return for the stock market. And in a pre-recession time, guys, you're going to have bonds appreciating, yields going down, and stocks going higher. The stock market as a whole going higher. I've shown in multiple recessions, pre-recession periods, stocks go higher. Then right before, maybe a month before the official recession, is when you have a crash. or maybe right as the recession is official, then you have markets crash. So we're still in a pre-recession period. Safe havens are going to benefit, bonds and stocks going up, of course, Bitcoin going up as well. Let's take a look at the dollar. And I posted this the other day to Twitter when it was bouncing on this 61.8 retracement fib. And also I was looking at the RSI was hitting oversold. I was like, this is a perfect time for a bounce. And it just happened to catch it perfectly, pretty much right as it bounced. Also, we can look at the MACD. It's starting to turn up. So I think the dollar, if you guys have been following my content for the last month or two, well, the last 2 years, I've been big, strong dollar advocate. But the last month or two, I'm like, well, I don't really have a strong feeling on where this is going. But right now, I think we're going higher in the dollar. I think the next leg of this is higher. Whether we can break these highs up here at 106, 107, I don't know. But we are definitely going up from 103. And we will see. Overall, over the next several years, we are just going to stay range bound, in my opinion, between 100 and 110, maybe for the next 3 to 5 years. Okay, how about, did I take a look at oil yet? So we can take a look at this. Oil, despite OPEC talking about their cuts, oil still sold off big the last few days. Yesterday, I think, was when they announced the 1 million cut. And since then, it's been down. Let's see, we can measure this, the percentage down. 4.5% since they announced the cut. There is just so little demand out there, guys. So little demand. And there's so much potential. Especially if the U.S. is going to start working with Venezuela. I saw maybe that possibly is not going to happen now, but maybe it happens in the near future. Venezuela could turn back on, pump several million barrels per day more. I mean, it's going to take them a while to build up to that. But, if that happens, within 5 years, they could be pumping millions of barrels more. The U.S., if we get a friendly administration in power that is going to open up the oil industry in the United States, we could produce the same 3 or 4 million more barrels a day in the next 5 years. And we're already producing at all-time highs, over 13 million barrels per day. We're the biggest oil producer in the world. And OPEC and Russia and all, OPEC plus, I guess you could say, they are all artificially pulling back on their production. Millions of barrels. I think this will make it over 5 million barrels per day in voluntary cuts. So we're talking 10 to 20 million barrels per day that could come on. That's why I say, compared to production, we have hit peak oil demand and the future of the oil price is lower. And this falling that we've done, well, let's zoom out for the entire last year or two. Of course, we had the big ramp up back here with the Russia-Ukraine invasion kicking off. That spooked the market up to $130 a barrel, but it has been down ever since. Everyone's talking again back in September, all the oil people trying to sell you oil doom about $150 a barrel oil, $200 a barrel oil. And I had this resistance on the chart for a long time. Boom, came back up and it fell down. Even with this war in the Middle East, it can't hold this. There is just so little demand out there. And that confirms that we're heading into recession. Confirms. All right. What else? Take a look at the Chinese yuan. I don't think I'm losing track if I already talked about this one. So posted on Twitter as this was bouncing and threatening to break the 50-day moving average back here on November 3rd. I was like, hey, this looks like it could break here because it's not moving up as fast. It's kind of, getting ready to break down. And then it did back tested the 50-day, and now it's testing the 200-day moving average. So this is the dollar breaking down against the yuan. The yuan is strengthening here in this chart, and that's good for Bitcoin. That's very good for Bitcoin. Bitcoin tends to do well when the Chinese yuan is strengthening. And it's very eerie. Like for the Bitcoin Magazine Pro, I went back and did a long-term analysis of this with Bitcoin versus this cross, specifically US dollar and Chinese yuan. And it is eerie to the week when the yuan, bottoms or tops. Those are bottoms and tops in Bitcoin. It's very, very closely correlated. So this is very good for Bitcoin when the yuan is strengthening. And last but not least, let's take a look at gold. So lots of stuff out there on Twitter today that I saw about gold hitting new, fresh all-time highs. But that's not the case, actually. This one right here is still above the price. So my chart, at least, from what exchange is this from? I don't know, but it's the gold spot that I've been using for years. And this had an intraday high, so it won't be a high. The close was 2049, and we're above that now. But the intraday here, back on May 4th, it got to 2081, and right now it's sitting at 2071. So this is not yet an all-time high, at least an intraday all-time high. But if it closes up here, it will be a high close for gold. Let's take a look at the oscillators and stuff. So we had this bear div here, massively oversold. I talked about it back then. This was right when the Israel Hamas stuff was starting. The day prior, I think. So that would be October 6th, because the invasion was October 7th, right? But anyway, I talked about it right a couple days before that. And I was like, hey, this is getting close to a bunch of different retracement levels. It's extremely oversold. It was the most oversold in like 6 years or something. And so I was like, this is technically ready for a bounce. And that's what we got. And then people like Bob Elliott, they're talking, saying, oh, look how gold is behaving exactly as you would expect a geopolitical hedge to act. Bitcoin didn't. Well, this was a technical move in gold. It had nothing to do with the Israel-Hamas stuff. It was, like I said, the most oversold in years and years. Technically bounced off a very good level and was going higher. But right now, it is hitting oversold. I don't think it will continue immediately. We might have to have some consolidation, like a consolidation pattern of some sort, like Bitcoin right now in the ascending channel. That's possible for gold to continue working higher. But if the dollar doesn't break down and it actually starts going higher, which I think it could do that right now, this could be yet again another top for gold, right around 2,100. Gold bugs have been waiting for many decades to get some return, and I don't think it's going to happen right now. But okay, that is all I have for today, guys. Thank you for joining me. Let me check the comment section real quick. Dex Invictus back with us. What's up, buddy? Let's check Telegram. I'm going to go into the no comments I see on any of those charts or in the post for the live stream. So, all right, guys, that's going to do it. Thanks for joining me. Have a great weekend. Check out bitcoinandmarkets.com. Check out Rumble or YouTube. Make sure you like, comment, subscribe. Oh yeah, I also started up my own Substack. So I'm writing on the Bitcoin Magazine Pro Substack, but also I had my own Substack started a long time ago, and I never posted there. But what I'm going to do is start posting all of my content from bitcoinandmarkets.com and just dual posting it over to Substack. Hopefully that gets the reach out there a little bit more. If you guys want to become the professional tier members, you can do that on Substack as well. And I'm just going to be reposting all of my protons over to Substack so you guys can check that out. All right. I'll see you guys on the next one. Bye.